Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Midweek check-in. Welcome to Modern Investing Techniques, episode 54. Today is May 27th, 2026. I'm Patrick, broadcasting from Vancouver. Midweek, let's reassess this week's positions and look for fresh setups. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian investors holding bank stocks got a double signal today, as BMO and Scotiabank both raised dividends after beating earnings, highlighting capital markets strength that could support further sector rotation into financials. North American markets showed divergence today. The S&P 500 closed at 7,519, up 0.6%. The NASDAQ Composite reached 26,656, up 1.2% and hitting a fresh record on AI chip enthusiasm. The TSX Composite slipped to 34,654, down 0.2%. Global shares tracked Wall Street higher as oil prices fell. Investors are watching US dollar strength and Fed inflation signals alongside Canadian bank earnings momentum. With the banks delivering clear income plus growth signals, let's move straight into today's actionable strategy for TFSA and RRSP accounts. Bank earnings beats paired with dividend hikes offer a concrete income plus growth setup for TFSA and RRSP accounts. When capital markets revenue drives the outperformance, the payout increase signals sustainable cash flow rather than one-time gains. Today's BMO report showed net income of $2.6 billion, up 34% year over year, directly tied to trading and advisory fees. Investors can screen for banks where capital markets revenue exceeds 25% of total and the dividend yield sits above the sector average. Then enter on the post-earnings pullback if volume confirms the move. This approach has historically delivered stable total returns during periods when growth stocks rotate out of favor. Risks include regulatory capital requirements that could cap future hikes if credit losses rise. Now let's put that bank momentum to work with our simulated flash trade. This is a simulated trade for educational purposes only. No real money is involved. Today's practice investment is a flash trade on TSM, Taiwan's semiconductor manufacturing company, listed on the NYSE in the tech sector. The strategy is a momentum entry on AI-driven earnings visibility and incentive payout increase, held same day only. The catalyst is TSMC's CEO pledging more than 30% average profit-sharing bump tied directly to soaring AI chip demand. The technical setup shows the stock trading above its 50-day moving average on elevated volume, with nearest resistance near recent highs and support at the 20-day average. Risk assessment notes that broader rotation out of AI names could reverse gains quickly, so the stop loss is set 4% below entry. The target is plus 2% to plus 4% intraday on continued sector momentum. Confidence level is medium because the AI revenue catalyst is clear but lacks same-day volume confirmation above the 20-day average, required by current rules. This trade demonstrates how to layer a policy-style corporate catalyst onto an existing AI theme while enforcing the volume confirmation filter. Listeners learn to size positions conservatively even when the fundamental story is strong. Before we review how yesterday's trade performed, here's the key lesson from today's entry. Last flash trade was on IBM, driven by a government-backed quantum computing investment catalyst. Entry came at $232.58 at market open. Exit came at $252.97 at market close. The position gained 8.77% or $87.67 on a $1,000 simulated position. The trade gained 8.77%, while the NASDAQ rose 1.2% on the same day, delivering 7.57% alpha. The government quantum catalyst produced strong single-day outperformance, but the position still required strict position sizing because broader rotation can quickly reverse gains once the news is absorbed. With the options income theme fresh in mind, let's cover the basics every Canadian investor should know. Imagine you own 100 shares of a Canadian bank trading at $65 that just raised its dividend. You want extra yield without selling. Selling a covered call at the 68 strike for a $1.20 premium gives you 1.85% income over 30 days on top of the dividend, but caps upside if the stock rallies sharply. The mechanism works because the premium reflects both intrinsic value, which is zero here, and time value driven by volatility and days to expiration. Professionals always check open interest and bid-ask width before entering. A wide spread on low volume strikes can erase half the theoretical yield through slippage. The biggest mistake retail investors make is treating covered calls as free money without realizing they are short a call that can be assigned on news. Instead, always size the position so the premium covers at least 60% of your expected downside over the holding period. While you're in your brokerage looking at those option chains, here are 2 new tools worth exploring. Agora lets Azure users query hybrid and multi-cloud data estates without moving data, directly supporting agentic AI workflows that can scan earnings transcripts and filings at scale. Canadian investors running multi-account TFSA and RRSP analysis can connect brokerage exports to Azure and run natural language queries on holdings without building custom ETL pipelines. The service is now listed on the Microsoft Marketplace with usage-based pricing. NIQ's new capability links dated consumer sentiment directly to actual purchase data inside its Discover platform, giving retail investors a faster read on spending trends than lagging retail sales reports. Users can filter by category and geography to spot early shifts in discretionary spending that often precede sector moves. Access is available through NIQ's enterprise tiers with API export options. A few quick headlines before we wrap with today's listener challenge. Scotiabank reported $2.63 billion in second quarter profit, up 30% year over year, and raised its quarterly payout. Add BNS to your TFSA dividend watch list for potential re-entry on any post-announcement weakness. Industry sources are discussing a potential SpaceX Tesla tie-up as SpaceX prepares its public debut next month. Watch TSLA options chain for unusual open interest in September contracts as a sentiment gauge. U.S. funds are parking cash ahead of SpaceX and OpenAI IPOs because index rule changes could accelerate inclusion into benchmarks. Hold a small cash buffer in USD within RRSP accounts to deploy on any post-IPO volatility. Mortgage refinance demand fell 18% as rates hit a 9-month high, while purchase demand remains above last year's levels. Avoid adding Canadian bank exposure this week until refinance data stabilizes. Finally, here's your action item for the day. Open your brokerage platform, pull up the BMO or Scotiabank options chain, and calculate the 30-day covered call yield on 100 shares using the nearest out-of-the-money strike. Note the annualized figure and compare it to the current dividend yield. Our simulated portfolio now stands at 24 total trades with a 58% win rate. Cumulative profit and loss sits at $114.78. Average return per trade is 0.48%. The best trade reached 13.36%, while the worst reached negative 11.35%. Current streak is 3 wins. Our AI analysis is learning from volume patterns on policy-driven catalysts and adjusting position sizing accordingly. Before we wrap, keep an eye on post-earnings volume in the Canadian banks tomorrow, as any confirmation could set up the next rotation move. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?